What's going on, everyone? In this video, I want to go over how we can stop losing money when it comes to day trading options by having proper risk management. Now, again, I know this term gets thrown out there a lot. You know, people set different stop losses. They have hard dollar amount stops. They've got this, that, and the other. What I'm going to go ahead and show you guys here is using my 5-minute strategy. Again, this is not nothing revolutionary, guys. I make trading as simple as possible. We don't need to make this difficult. This is not rocket science. This is all about getting setups, taking the trades, using a stop, using risk management, protecting ourselves, and continuing to take more trades. That's all it is, right? When you start getting into the whole idea of, you know, the stock market and the market makers and it's rigged and it's this and it's that and, you know, all kinds of crazy stuff, you're going to spin your wheels in the dirt. So what I want to tell you guys is this, okay? We get a 5-minute setup here right off the open. You can see in the pre-market session, we close below the 20 SMA. For those of you guys who are in my Discord, you guys already know what I'm talking about. We get a 20 play right off the bell. If you guys want to learn the strategy, information to learn the strategy is down below. So what we are looking at here is if we see this 5-minute candle in the pre-market session, we get our first close below the 20 SMA. How are we going to stop losing money? I'm going to tell you one thing. We're going to use a 1-bar stop, guys. What is a 1-bar stop? That means that once we get into this play on this confirmation off the open, if we get a 5-minute candle close over our reason why candle, right? We get out of the trade. Okay, that's called a 1-bar stop. So your stop loss is going to be here. Boom. You're going to protect yourselves there. This is your entry right off the bell. You do have the 200 SMA here, which is going to be a first profit taking zone. Now, I want to incorporate the ATR here. So we're looking at the 5-minute time frame. We can say the average ATR here on Tesla is around $1. Okay, around $1. So if we're going to risk around $1.50 on the trade, and we make $1.50 on the trade, good place to take some profits, right? That's a 1-to-1. Again, Tesla's down 7, 8, 9 points today. We can go ahead and continue to capture more points. But what I'm saying is, for me, example, I'm going to use myself as a prime example. I take 10 contracts of Tesla. As soon as I'm up $1, $1.50, I start locking in gains. And I lock in gains on at least half my size. Then what I do is just leave those remaining contracts to break even, or I continue to run my original stop, right? I run my original stop and I look for another $1 and I'll take out some more, and I look for another $1 and I'll take out some more. And every $1 down, I kind of just take it out. If we can see the ATR sitting around $1 here on Tesla on a 5-minute time frame, every $1 I want to be taking profits. I want to be taking profits $1 down. Even if you take 10 contracts and you just take profits $1 down, $1 down, use your original stop, you're going to make more than $1 on the trade. You're going to make $2, $3, $4 on the trade. And that's how you start to protect yourself from losing money. Our stop loss is never going to change. It's always going to be over the reason why candle. So there's a setup number 1. Okay, there's setup number 1. Again, stop loss goes here, entry candles there, take profits $1 down, lock in gains, right? And then continue to trail your stop and continue to take gains dollars down. Okay, next setup, candle closes over the 20 SMA on a little dead cat bounce here. 1-bar stop, guys. If we get a 5-minute candle below that 1 bar, we get out of the trade and we just chalk it up and we move on to the next trade. Again, we're taking profits $1 up. So we quickly go up and then we pull back and then we get that next $1 here. So if we look at entry price of around 265.50, it goes up to 266.50. That's your $1 there. You should be taking out half size. We pull back, we stay above our stop loss. Remember, we're above our 1-bar stop. So boom, there's our stop loss. Candle never closes. This pullback never closes below our stop loss, so we're still in a trade. And as this continues to push up, we look for that next $1. And if we can see here, we go from a price of 266.50 all the way up to 267.40, which is about $2. So we would essentially made $2 on the trade before getting stopped out at break even on the remaining runners, if you were still holding any runners. If you look at the next setup that we had here on the 20 play strategy, you can see, again, here's our reason why candle. We set the 1-bar stop there. Here's our entry candle. Money goes into this candle there, right? This candle here. And then again, here we go again. We're looking to take profits $1 down, looking to take profits $1 down, looking to take profits $1 down, looking to take profits $1 down. And then you should just easily scale your way out of that You know, depending on if you took 2, 3, 4 contracts, you would be up $2, $3, $4 on the last potential trade. That's how we're going to limit our losses. Again, it never changes. It never changes. I cannot stress this enough. So many people are hesitant to take trades. So many people are scared to take these trades. Understand the risk going in, right? So if you're going to trade Tesla, prepare to give up $1, $1.50, $2 on the trade. Okay. The ATR is sitting at around $1. Okay. So, you know, what that means is that this is going to sway up and down within, you know, $1 range, right? So if we do get stopped out, potentially we could be losing $1 or $1.50 or $2. Be okay with the risk first off. If you're not okay with the risk, first off, trade a smaller stock. Second off, make sure your stop never changes. It's always above the reason why candle, okay? Make sure if the ATR is around $1, make sure you're taking profits every dollar down, right? And then after you start taking your initial profits, hold those runners and then use them as break even stops. So you would have made a couple points here, you would have made a couple points here, you would have made a couple points here, you would have essentially made, you know, 4, 6, 8 points on the day, depending on how many contracts you traded. Again, that's how you're going to save yourself. That's how you're going to protect yourself. Do that on a day in and day out basis. Don't try to get cute, guys. I don't really care which direction the market is moving on a day in and day out basis. I'm just looking for my setups. I'm looking for change in trends. That's all I'm looking for. And when I get those short-term change in trends on the 5-minute time frame, I take my setups and I use it. I scale accordingly. That's it. You know, it's like, I don't really know how else to really put it, because it's that simple, right? And it's like, you know, a lot of times people look at it and they're like, well, you know, how do you know it's going to go down? I don't know it's going to go down. How do you know the stock's going to go up? I don't. All I know is that I got a technical setup based on my strategy. I have a technical stop that I'm going to use to protect myself, and then I'm going to take my profits, right? I'm going to take my profits. So again, you know, the only thing you control is where you stop out. You can't control this, right? The only thing you can do here is set a stop loss here. You can't control this, okay? The only thing you can do is set a stop loss here. You can't control what happens here. So, you know, even though that these 3 trades worked out, you would have been 3 for 3 on the day, taking, you know, $1 up, $1 down, $1 down, $1 down. You know, it could have done something like this, right? And then you would have been stopped out. This could have done something like this, and then you got stopped out. This could have done something like this, and then you got stopped out. Well, if you get stopped out, you get stopped out. You know, what are you going to do? Sit and cry about it? Like, again, you know, too many people cry about it. Too many people want, you know, the perfect entry, the perfect setup, the perfect strategy, the perfect this. They want a 99% hit rate. It's not going to happen. Protect yourself at a 1 bar stop, and I can guarantee you're going to make more than 1 bar on your winning trades, because when you get into these winning trades, you do not have to do anything. The trade does it for you. It's the stock's job, right? And again, it's Tesla's job to continue to go down. So if we're looking at this setup here short below the 20, and we use a 1 bar stop, it's Tesla's job to work for me. You are working for me. I'm not working for Tesla. Tesla's working for me. Only thing I need to do is control my stop. If we're looking for the change in trend on the reversal here, I set a 1 bar stop. It's Tesla's job to do its job and go up. It's my job to stop out if the trade comes down. Same thing here. We get the close below the 20. We get our confirmation candle here. Money goes into the confirmation candle. Again, 1 bar stop. It's Tesla's job to work for me. Tesla, you work for me. It doesn't matter. If we're trading Apple, you work for me. The only thing I need to do is control where I stop out at. I can't control what the price does after I'm in it. So again, don't be afraid to take these trades. Don't be afraid to set a 1 bar stop. Again, if you're consistent at setting your 1 bar stops, you will take more than 1 bars when the trades work. Because in this particular situation, you weren't a hero. You weren't some brain surgeon. You weren't no chemist or rocket scientist. You weren't, you know, kind of pulling the strings to make Tesla go down. You did absolutely nothing. All you did was identify the setup, set a stop loss, and all you had to do was sit and wait for profits. Again, same thing on the dead cat bounce here. You set a 1 bar stop, you get in on the entry at 8:20 a.m. Pacific Standard Time. You do nothing other than watch the stock go up. So stop making it more harder than what it is. What's hard is stopping out. What's hard is cutting your losses. What's hard is accepting the fact that your trade lost when it fails. When Tesla fails and your setup gets, you know, invalidated, it's not your fault as a trader. It's Tesla's fault that this SOB didn't do what it's supposed to do. When we get these setups, the stock's supposed to do what it's supposed to do. And if sometimes it goes off the railroad tracks, like sometimes they do, and it stops doing what it's supposed to do, then it's our job to now step in as the conductor and put its ass back on track, meaning stop out. Again, and then you look for another trade. Hope this video resonates with you guys. If you guys want to learn how to trade my full strategy, join evolutiontraders.com. That link is down in the Discord below. If you guys want to just join the Discord and get involved in the chat, and everything we got going on in there. That link is also down below, and I'll see you guys on the next video.